Today we are going to be looking at a very effective tool which has worked for millions of traders across the world for so many years. It has worked for me. I believe it will work for you. So watch this video till the end. If you haven't subscribed yet, consider subscribing to this channel. Hit that button. Thank you very much. Okay, and also like this video. It's going to be interesting. Okay, even if you are new, you are going to learn something very powerful in the Forex market. This tool we are going to be sharing today is the Fibonacci retracement tool, and also we are going to be looking at the Fibonacci extension tool and how we can use this, apply this on our charts for the best entries ever. The best entries ever. This has been used and it has been back tested by myself and many other traders, and it is proven to be effective. Okay, so this Fibonacci retracement tool, for example, shows us this, indicates to us the best areas, okay, the best areas on the chart, support and resistance areas where we can actually place our stop loss, okay, and the Fibonacci extension shows us where we can actually place our take profits, okay, so that we can win in this Forex market and take some dollars out of it. So watch this video till the end. All right. Okay, guys. Now here on the screen here, I'm going to be showing you how a Fibonacci retracement tool looks. Okay. So a Fibonacci retracement tool, for those who are completely new, in an uptrend, you drag it from the bottom to the top. I'm going to show you where that you can drag that off of. All right. All right. So it looks something like this. This is my own customized levels. All right. But you can always find these levels in percentages or in values. Like for me here, if you click here on my settings, I've set mine like this. So if you are setting up your Fibonacci retracement tool for the first time, you can copy my levels, okay, and also go down below and choose percentages instead of values. Choose percents instead of values. They're easier to use and they're easier for me. They are quite easier. I like to work with percentages, not values. All right. So here, this is how a Fibonacci retracement tool looks like. Okay, it has these levels. Okay, there is this 100% level, there is this 78.6 level, 61.8 level, 50% level, 38.2 level, and obviously 0% level retracement. All right, so those are the levels that I've chosen. And usually for me, as some traders who are experienced know, this area between 50% and 61.8% is usually the golden zone area, where price will usually retrace to. Let's say this is an upward movement, price will return to this golden level before rallying all the way to the upside. Okay, this area, the golden zone area, has been proven many times over and over to be a very important, I would say, significant area to place your buys if you are going to the upside, if you are buying or in an uptrend, or place your sales if you are in a downtrend. Okay, so that take care of this area. Take note of this area, 61.8, between 61.8 and 50%. This area here is a golden zone area. All right, so now these levels that you see here, 38.2, 50%, 61.8, 78.6, and 100%, those levels are very important, especially these ones in between 78.6 and 38.2. okay, this area here, this area is very important, this area, all right, of the Fibonacci, those levels, okay, this level, okay, that level of 38 and this 50 and 61.8 and 78.6, okay, in between there, those are in an uptrend support areas which are very crucial in your retracement, where you are looking to buy at those points. And you buy when you have confluence like candlestick patterns, like bullish engulfing candlestick pattern to the upside, or bearish engulfing candlestick pattern if you are selling. Or you can use 3 white soldiers when you are buying, 3 black crows when you are selling. You can use a double bottom or double top in case you are selling, and double bottom if you are buying. So our Fibonacci tool looks like this, and this is how you would use it in an uptrend. And just before we continue, you cannot use this tool, all right? This tool cannot be used, this Fibonacci retracement tool or Fibonacci extension tool cannot be used in a consolidating market. If you have a price action like this on your chart, all right, if it is a consolidating market or sideways market like this, you cannot use this tool in a market like this one. It will not be as effective. So avoid using the Fibonacci retracement tool or Fibonacci extension tool in this in a consolidating or sideways market. It works only in a trending market. Like in an uptrend, you have to have higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. All right. So for it to be effective, you must have a movement like this one. All right. So take care. Right. So we are looking at an uptrend here. So in an uptrend, you drag your Fibonacci tool. Okay, you take your Fibonacci tool and drag it from the most recent significant low, which is this price you have already marked. It's a price which is the swing low, which is most significant, the most recent one, to the most recent significant swing high, which is this price over here. And then drag your tool to the right. Okay, like this. Drag your tool to the right. As you can see, those levels, those percentage levels are there. So we are looking at these percentage levels between 78.6 and 38.2. This is our current price. Let's assume this is our current price over here. All right, this is our current price. So we are hoping that this retracement will get to these levels before we can determine or we can place our buy orders all the way to the upside. So when the price gets, let's assume the price gets to 38.2%, okay, here, okay, and then we see a bullish engulfing candle here. All right, let's say we see a bullish engulfing candle like that, indicating an aggressive upward momentum. So what we do, we already confirmed that this is an upward movement, and at 38.2% we see percent level, Fibonacci level, it's a support level of the Fibonacci. So we see this candlestick pattern forming, a bullish engulfing or double bottom or three white soldiers forming here. That is our confluence, together with this resistance before, which turned the support over here. Okay, let me just indicate S over here. Okay, S. This is our support level now. It turns to support over here. So now we are hoping that price will return to this level, these levels here, between 50 and 38.2% before we can take our buys. So now we see confluence. Okay, we see now a confluence. We see a bullish engulfing candle around these areas. Okay, this support, this 38 and 50. Okay, that between 38.2 and 50%. We see this kind of movement. Then we can place our buy orders here when we see that confluence happening. Okay, and our stop loss will be below the 50%, below the 50%, right there. All right, we place our stop loss below the 50%. If our confluence is at 38.2%, now listen to this, this is very important. If our confluence to buy happens at 38.2%, then we place our stop loss below 50%, a few pips below 50%. Okay, if our confluence happens at 50%, okay, and we are placing our buys at 50% Fibonacci retracement level, then we place our stop loss below 61.8%. That's how it works, okay, more effectively. So in this case, our confluence to buy is at 38.2%. So we place our stop loss just below 50% retracement level, okay, and we mark it out. That is our stop loss right there. This would be our stop loss. So we indicate it with a line, and then we remove our Fibonacci tool, right? We just remove our Fibonacci tool because we have already used it to determine, that is our Fibonacci retracement tool. We have already used it to determine where to place our stop loss and as confluence to help us determine where we can actually place our buys. So around there, 38.2%, right? So we are placing our buys there, and we have already determined our stop loss level using the Fibonacci retracement level. It's always, the stop loss is always below where you are one step below. All right, in the upward movement, it's always one level below. By level, I mean Fibonacci level. If you are buying at 50%, you are placing your stop loss below 61.8%. In this case, we are buying at 38.2%. We are placing our stop loss below 50%, right? So we have already marked it out. Now we want to determine where to take our take profits. Okay, we want to determine where we will take our take profit. We don't know how high this price is going to rise. All right, okay, we don't know how high it's going to rise. So to determine our take profit levels, we are going to use the Fibonacci extension. The Fibonacci extension tool looks like this. You drag it the same way you drag the Fibonacci retracement. You drag it from the significant swing low to the significant swing high over there. Okay, and then drag it down below to the current price where you are buying at, and then drag to the right. All right, drag to the right like that. All right. Okay. Drag to the right. This was our pivot area. Pivot area is where both resistance and support is. Okay, that's our pivot area. So now this is how you draw your Fibonacci extension. Again, let me repeat that. You take your Fibonacci extension tool, drag it from the significant low, the significant high here, okay? And then drag it again the third time to the most recent price, the current price right now at the support, okay? At the support here, where you have already taken your trade, you have already bought, but the price is right there. So you drag your tool to the current price and drag it to the right, all right? Because you have already taken your trade, but you want to know where you take your profit. So now these are the levels where you take your profit. You take your profit at 38.2, 50%, 61.8, and 78.6 and 100%. Sometimes it will go for swing traders. You can take your profit at even 161.8% over there. All right. So this is how you would use the Fibonacci retracement tool to enter your trade and to mark out your stop loss, and also use the Fibonacci extension tool to determine where you will take your profit. So in this case, you take your profit at 38.2, 50%, 61.8, 78.6, 100%, and these are ideal. Between 38.2 and 100% is ideal. Okay, but if you're a swing trader, you can continue and trade your stop loss to 161.8. Okay, so this is how you take your profit in all these resistance levels of the Fibonacci extension level, extension tool. These are all take profit areas. Okay, so that is how you'd use both Fibonacci extension and Fibonacci retracement tools to determine, first of all, the Fibonacci retracement to determine where for confluence to enter the market. In an uptrend, you are buying. So when your confluences agree, or you have confluence, you buy. Okay, and after buying, you can now use your place your stop loss below the next level, below the area where you have bought at, the percentage area where you have bought at. If you have bought at 38.2%, you place your stop loss below 50%, right? Fibonacci retracement level. And if you have bought at 50%, you place your stop loss below 61.8% Fibonacci retracement level. And also now, after placing your stop loss level, okay, using the retracement tool, and after placing your trade, now after buying, you remove the Fibonacci retracement tool after marking out the stop loss. Then you can now use your Fibonacci extension tool. Okay, drag it from the significant low to the significant high, and then drag it back again to the current price that is running. Okay, after you have bought, or where you bought at, the price where you bought at, and then drag it to the right. Okay, then the levels that you see there, 38.2, 50%, 61.8, those are your take profit levels with the Fibonacci extension level extension tool, on the Fibonacci extension tool. So I hope that is clear. And so let's move on to the opposite direction of the downtrend. Okay, guys, now in a downtrend, in the opposite direction, you are looking at this is a downtrend. All right. So in a downtrend market, as I said, these tools only work in trending markets, not in consolidating markets. So in a downtrend, you'd be looking at a scenario like this one, all right, where you have lower lows and lower highs. Okay, lower low, lower highs, lower low and lower highs. Okay, so this would be a downtrend market. This would be a downtrend. All right, so in a downtrend, it is similar to the bullish, but in the opposite direction. So you'd have price moving in this way. So you have a significant swing high price over here. Okay, this would be our significant swing high. All right, in a downtrend, and this would be our significant swing low in a downtrend. Okay, so this is our current price here. Okay, this is our current price. So price is beginning to retrace to this pivot area. Okay, pivot is where there is both support and resistance. So this price, we are hoping this price, we are anticipating this price, this current price, to retrace to these areas before we can sell. So we are looking to sell in this bearish market, but we don't know how high this price is going to retrace before we can place our sales. That is where the Fibonacci retracement tool comes in handy. So in this case, in the bearish trend, we drag our tool from the significant swing high to the significant swing low, okay, and then drag it again to the right. It's always dragging to the right. All right, so now in this case, Okay, let's assume our price moves from this current price and moves all the way. Let's just say from this current price, okay, it moves all the way to let's say the 50. Okay, let's say the 50. This is the 50% retracement area, okay, or level. Okay, it is the resistance level now. Because it is a downtrend, this will be a resistance level of the Fibonacci. So let's assume our price retraces all the way to the 50%. Okay, this would be our 50% over here. This level here would be our 50%. As you can see, our 50% will be there. All right, so let's assume our price returns to the 50% retracement, Fibonacci retracement level. Okay, all right, so let's assume it returns there. So what we are hoping is that scenario. All right, so we are hoping for that scenario to play out before we can place ourselves all the way to the downside. All right, so now when the price returns to this 50, we are just using 50 for our illustration here. All right, returns to this 50 and there's a confluence of support. See, previously here was this was a support area. Okay, previously price bounced off this zone, okay, before moving up here and returning and breaking below. All right, now we have seen the current price has returned to this area, so we are looking to see what happens around here. Okay, so let's assume it will return to this 50% retracement level, okay, or 50% resistance level of the Fibonacci retracement tool. So at this level, we are watching to see what happens to the price there. If we see a bearish engulfing candlestick pattern here, okay, let's assume we see a bearish engulfing candle here, okay, like this, okay, a candle that looks like that, but a bearish candle in that area, okay, around these areas. I'm trying to draw a bearish engulfing candle. So if you see a bearish engulfing candlestick pattern around this area, okay, you would place your sell position, okay, place your sell position at this area when you see your confluence, because this is a pivot area and you have seen a bearish engulfing candle or a 3 black crows or even a double top around this area, which is a pivot area and which is also a 50% retracement level. Okay, that gives you confluence to sell. So you place your sell position there, you sell there, place your stop loss above. This time it's above the 61.8% right there. It's above the 61.8 right there. You mark it with a line, 61.8, just above the 61.8. Okay, that would be your stop loss, because this time you are selling at 50%. So your stop loss will be above 61.8%. That will be the next resistance level of the Fibonacci retracement. So then, now the next thing you are going to do is, let's say this is your stop loss. Just mark it out, your stop loss level. Okay, that is your stop loss level. Okay, you have already marked it out with a line. So now you'd remove your Fibonacci retracement tool, you delete it just to create a clean chart. All right, you delete it. And now what you want to determine, since you have already determined with the Fibonacci retracement tool that this is your stop loss area above the 61.8%, now you want, mind you, at this time you have already placed your order. So you want to set your stop loss and you take profit. Now you have already set your stop loss. You are looking to set your take profit. Your take profit levels you do not know yet, because you don't know how low this price is going to drop from your sell position all the way down here. You don't know how low it's going to drop. That is where you use now the Fibonacci extension tool. Okay, so like the opposite of the previous, you drag it from the significant high to the significant low price, okay, and drag it back to where your confluence started and where you bought at, okay, at the support, at the resistance there, at the 50%, okay, you drag it there where you saw the price action changing direction. All right, okay, and your confluence is, okay, that's where you drag it at, or the current price where you bought at, okay, you drag it there and drag to the right. All right, you drag it to the right. Okay, that is what you will see on your chart. Okay, this would be what you'll be seeing on your chart. So now you are looking at levels here: 38, 50, 61.8, okay, 76, 78.6, and 100%. And also there's this extreme level of 160, 61.8 down here, 61.8. Okay, for swing traders, they can hold their trade. So in this case, after placing your sell orders, you can sell all the way to 100% is ideal to take your profit. You can also take your profit at 78.6. You can take your profit at 61.8. You can take your profit at 50%. You can take your profit also a little bit of profit at 38.2. The ideal places to take your profit will be between 38.2 and 100%. Okay, especially if you're a day trader, that would be good. Okay, for those who are swing traders, you can take your profit all the way and hold it all the way to 161.8%. So this is how you would use it in the reverse, okay, to take your profit. So you take your profit all the way to these levels, all right? Let's say your TP, you take profit, all right? Your take profit would be at 161.8 if you're a swing trader for a long time. And the ideal is between 100%, 78.6, 61.8, 50%, 38.2. Okay, I'll take in between these areas. All these are levels of support. Okay, levels of support of the Fibonacci extension where you would place your take profit. Guys, this is how it works. So the next part, I'm going to be showing you on the real chart how this plays out. All right. So now in this gold chart example, in the bullish trend, okay, in an uptrend, we can see clearly that this is trending upwards and the price is rallying all the way to the upside. Okay, this we're using an example of gold. All right, so now we can see, as I've already marked out, this was the previously this was previously resistance over here. Okay, resistance, and then here it turned to support. So this becomes a very important pivot area. All right, pivot area. We also have a swing low here, significant swing low. So when we drag our Fibonacci retracement tool, all right, from this significant swing low to the significant swing high over there, which we have already marked this price over here, and we drag to the right, we can see in retrospect, okay, that price returned. There was this retracement over here. As you can see, there was this retracement back here to retest the 50%, okay, retracement level of the Fibonacci. Okay, it tested the 50% before it continued all the way to the upside. All right, so now what we are going to do here is after this we are going to place our trade, okay, at around this area. We are going to buy here at this bullish engulfing candle. We are buying here, okay, at this bullish engulfing candle. But before we do, okay, after placing our buys here at the bullish engulfing candle, we want to know where the price, all right, okay, where to place our stop loss. So our stop loss, okay, just like I previously illustrated, will be below the 61.8 right here. Our stop loss will be right there. Okay, our stop loss will be a few pips below the 61.8 right there. Okay, our stop loss will be there. 61.8 line is this orange line right there. So we place our stop loss right here. Okay, and after buying from here, we place our stop loss here. After placing our stop loss, we delete this Fibonacci retracement tool, all right, because we have already marked out our stop loss level. Okay, we bought from over here at this bullish engulfing candle. Okay, we bought over here. Our stop loss just below here. Okay, our stop loss is right there. This will be our SL, stop loss. Okay, this will be our stop loss right there. That will be our stop loss down here. And now we want to know where price is headed next, so we can take our take profit. Okay, so now we take our Fibonacci extension tool this time, extension tool, and we drag our Fibonacci extension tool from the significant swing low, all right, to the significant swing high here. Okay, and then return down here to where the price bounced off at here, okay, at 50% previously, Fibonacci retracement at here, before where we bought at here. And then we drag the price, I mean our tool, to the right. Okay, you see it coincides with where there is resistance, okay, and support. All right, this is our current support over here. So this is also a pivot area. So this is very important. We have all the confluences, so we drag this to the right. As you can see, the levels where we can place our take profit. We can take our profit here. Okay, let's change that to blue. We can take our profit at 38.2, 50%, 61.8, 78.6, 100%. As you can see, in retrospect, it hit all those points. All right, although there was some retracement, but we are still safe off because our stop loss is below here. Okay, our stop loss is below here. Even with this retracement, couldn't take out this trade because you see, it wouldn't have taken you out because our stop loss is safe off down here. So it went all and took out all the take profits here. Okay, rallied all the way to the 161.8 up here. You can see, even with a swing trader would have actually made a lot of money profit here, all the way to 161.8. All right, so this is how you determine where to place your take profits. All these levels would have given you profit, all of them. All right, and your stop loss is way down here. Of course, when your take profit gets to about 78.6, you can move your stop loss into profit. Okay, like to be safe, you'd save your money. Okay, always protect your capital. You can move your stop loss into profit. Okay, like up to 61, 50% to break even when your take profit, when your price has reached up to about 100%, you can move your stop loss to 50% to break even. So you can see that you have won this trade. Okay, just like that. So in a downtrend, this is on the real chart of AUD USD. This is how it would look like in retrospect. That is, we are looking at what happened in the past. Just to illustrate here, this was clearly a downtrend. All right, as you can see, this is a clear downtrend. All right, so we would drag our Fibonacci retracement tool from the significant high price over here to the significant low over here and drag it to the right. Okay, as you can see, the retracement here, the price returned from this significant swing low to this area, golden zone area, before it dropped all the way down here. Okay, let me just do that again. All right, let me just do that again. Let me draw that out for you so that you can see clearly. So you can see from the significant swing low, it retraced all the way to this area, okay, golden zone area, before it dropped down below. So what we are looking at is this kind of formation. So at 61.8%, as you can see, it was a 61.8% level here. Okay, this was a 61.8% level here. That's where we saw this significant move to the downside. So in retrospect, you would actually have sold here. Of course, there was some kind of manipulation, and also some people could have sold from this point, but the most significant retracement was this one over here. And so what we would do is place our sells. Okay, we'll place our sell position after seeing this bearish three white or black cross to this point. We'll place our sell there, place our stop loss just above 78.6 right there. Okay, 78.6, above 78.6 right there. All right, that is our stop loss, because the price where we are selling at is 61.8%. Okay, the level, retracement level of the Fibonacci, we are selling at 61.8. So the most ideal position to place your stop loss would be above the 78.6 right there. After placing your stop loss position, marking it out, all right, you mark it out, all right, clearly, okay, and then after marking it out, you delete the Fibonacci retracement tool. All right, after deleting this Fibonacci retracement tool, you now use the Fibonacci extension tool to determine where to place your take profit. So you drag it from the significant high, the significant low again, and back to where you sold at. All right, where you sold at here, or right here where the price reversed at. Okay, that is even more effective if you drag it to where there was a reversal, a slight retracement before you sold right there. Okay, you'd place your it can be both ways. It can be at the beginning of the retracement, this slight retracement before you sold, or at the current price where you have sold at. Okay, I would prefer here where the retracement started before I sold. So you drag it, then you drag your tool to the right. Okay, you drag it to the right. All right. Okay, you drag it to the right. This is the scenario you would see. So as you can see, you take your take profit. Okay, your take profit would be here. right? Your take profit would be at the 100% most ideal, from 38.2 to 100%. As you can see, at the 100% started playing about. All right, so we would take our profit right here, okay, at the 100% right there. Okay, we'll take it at that. And also this continued even further. It retraced back up, as you can see, returned back up, but still around this area you can see that it dropped all the way back down. So even if you placed, for swing traders, still would not be taken out, because still our stop loss is up here, safe up here. Even swing traders would not be taken out. Okay, price would still fall down even beyond the 161.8%. So this is how you would apply this on the real market.